For the headline numbers and commentary from the Bank of Canada, what's your initial reaction?
So it sounds like Governor Poloz is telling us we're going to keep those rate cut hopes alive. We're not sure that we're going to move ahead with lowering the interest rate over time, but we want to give you the roadmap that would lead us to potentially doing that. And that's really critical at this stage. He needs to keep financial conditions fairly easy. He needs to keep the Canadian dollar soft. He needs to keep the global economy and Canadian watchers aware of the fact that if the economy does deteriorate, he is willing to step in. The big challenge, of course, being when I say he, Governor Poloz, will step in, by the time we get to that point, probably in the second half of 2020, it won't be Governor Poloz anymore. It'll be someone else at the helm, and that'll be a really critical component to those rate cut calls in 2020.
Yeah, Stephen Poloz in his final months as governor, set to leave in June, so I guess we'll start asking questions about who's going to be replacing him. But I do want to just get to another key quote that they shared, to your point there, about whether or not the door has been left open to a rate cut. In determining the path for future rates, they will be, quote, watching closely to see if the recent slowdown in growth is more persistent than forecast. What would you be watching for, do you think, in terms of the economy to determine if that ultimately plays out?
So they've consistently told us that they want to make sure that the global manufacturing recession, that global uncertainty didn't bleed from manufacturing into services. What does that mean? It means they want to make sure that that consumer remains protected. So number one for me is the jobs data. We know jobs did fantastic in 2019, but the momentum was decelerating. Does that deceleration in momentum continue through to 2020? That'll be number one. And number two, keep a very close eye on business investment. There's a lot of business investment data that tells us this is a weak component of the economy. The Bank of Canada has consistently said, don't worry, it's going to come back. But we haven't seen enough strong evidence that we're heading towards that V-shaped recovery yet. I think they're probably getting a little bit worried from the headlines they're reading to me.
All right, and as the Bank of Canada keeps rates unchanged, to your point about business investment, they've tweaked their basically growth picture as we wrapped up 2019. They projected fourth quarter annualized growth in the end of 2019 of 0.3%. And they're calling for 1.3% for the first quarter of 2020. So they're revising their growth estimates, not just for the fourth quarter, which was expected, but also for the first quarter on some of these wild cards.
1.3, that seems to be the magic number. That's what we had for Q3 of last year. That was their forecast for Q4, now for Q1. But bigger picture, what's that messaging? 1.3, that's pretty doldrums growth. That's muddle through growth. That's growth that is not really consistent with any form of hiking. It suggests to me that they are continuously focused on the downside risks. And when you get to 1.3%, you're getting a lot closer to zero than you are up towards the upper end of potential growth numbers. So I'd be watching those forecasts very closely. To me, that suggests they're a little bit more pessimistic on the outlook.
All right.